Good evening, all the joinees. We will just wait for a couple of more minutes to let people join. Till then, what I can really do is introduce our topic for today. Our today's discussion will predominantly revolve around three focus areas. Firstly, we will try and get an overview of market indices, Indian as well as global. We will see how comparisons of different sectors can be facilitated seamlessly using our platform. Here, we'll also understand the concept of India VIX and its utility to gauge the fear levels in the markets. Next, we will see how macroeconomic parameters of different countries can be compared very easily within a few clicks using our platform. Subsequently, we will move ahead to a detailed sector-wise performance analysis of Indian equity markets. Lastly, we will have a Q&A session wherein you can get all of your queries answered from our team. You may either do so by typing in your questions in the chat box, or you could directly just unmute yourself to speak. Before starting, I think we are good to go. Before starting, I just hope my screen is visible and my audio is clearly audible. If not, you can please let me know in the chat box so we can get it fixed. Let us now begin our session. Right here on your screen is the NGEN Markets platform. You can see different sections like different indices of different market levels. You can also see various sectoral indices over here. You can see best performers and the worst performers, a snapshot of world equity markets, index levels of various global markets, and other macroeconomic data. So if we were just to click on, say, Nifty 50, the levels would get plotted in the line chart manner alongside. If you could just click on BSE Sensex, the levels would get plotted, and we can really see the comparisons. Not just restricted to overall indices, we could just add in some specific sectors, like say compare say Nifty Auto with Nifty 50. Just click on Nifty Auto and the levels get plotted. If you just have to remove a certain index, just click on that again and the levels get removed. This is how you can see how Nifty Auto performed with respect to Nifty 50 as an index. Here you can also do across index performances. Say for example, you have to compare say Nifty 50 with BSE index. So this is how the levels get plotted. However, as we are aware that Sensex was BSE Sensex was the one that really started its operations initially in 1986 in India, and Nifty came later, only in 1997. So it is clearly evident that the levels are not comparable. So to ensure a fair comparison between them, what we really do is click on this rebase tab. When we click on rebase, the starting point of the indices are taken back to 100, a common start point. So then that really enables a fair comparison between the sectoral indices specifically. This is not just limited to Indian indices. We can also use this to compare global indices. Supposing, for example, you want to compare FTSE, which is a representative of which is trading on London Stock Exchange. Just click on FTSE and the levels get plotted. We can really compare it with Nifty. And this is how rebase function really works. Both of the levels are plotted starting from 100. So it enables a fair comparison. What we can really do now is click on this Excel download in Excel button right here, and the market indices that we have chosen that downloaded in an Excel sheet, just like this. You can really use this for your further analysis and come up with really exciting reports. Coming back, A screenshot is also possible if you just do not want to go into a detailed analysis, but just want to include a specific screenshot of this section. Just click on the camera button over here, and a specific screenshot will just get captured, and you can include that in any of your reports. We can also modify the start dates from here. Said you do not want to see it from January 10, you can really do, what you can really do is choose 2020 and January 1, and you're good to go. This is how the levels were. Let's now move ahead and understand what India VIX means. So India VIX is an abbreviation of volatility index. What it really shows is the fear factor that exists in the markets, specifically Indian markets. As India VIX is an indicator of fear factor in the markets. Similarly, for US markets, the same similar indicator is CBOE VIX. CBOE stands for Chicago Board of Exchange, and this is how the levels are. So India VIX generally gauges the fear factor in Indian markets, and CBOE is an equivalent representation of US markets. Now let us see how really they compare when during some really volatile times like COVID. So in 2020, say March of 2020, we could see there's a clear spike. See, this is what it is. There is a clear spike. There was a lot of fear among the investors as in what would happen to the markets. There was no clarity, no guidelines. So that is when it was at the peak. Currently, it is at 16.16%. It is represented in percentage terms. So it was very high during that time. And later down, as lockdown eased and vaccinations came into existence, the fear was really toned down and it really came back to its regular levels, which is approximately 15, 12, 13%. If you really want to download this data, then what you need to do is not click on rebase, because rebasing, what it will definitely do is take it to 100. And as this is expressed in terms of percentage, you really do not want to see how it will be when it is rebased to 100. So if you're really looking to download the data, then you should not really click on rebase and just keep the data as it is and then download, and you will have correct and not distorted figures. Correct? Let us now move ahead and see how our platform really shows a bird's eye view of the performance of world equity markets. So if we see on yearly basis, year-to-date basis, only 2 countries' equity markets have performed in positive. Rest all of them were in negative. We can really see India and UK were the only ones they were positive. If we really want to do a month-to-date comparison, only Hong Kong has given positive returns on a monthly basis. All other equity markets have written negative figures. This can be really used for a quick analysis of world equity markets. Let us now move ahead and see how economic data, macroeconomic data specifically, is available from our platform. And this is not just restricted to India. You can really have all the major countries' data included. Say, supposing you want to see United States, inflation rate, or GDP annual growth rate, all of this data is available. If you really want to make a comparison across countries, just click on the balance button here and the data pops up. You can really see inflation rate of Turkey was the highest, 84.39%, and all other countries' data were like this. Again, the camera function will let you screenshot the specific data, and you can really include this in reports or to just send it across to your clients in a broadcast list. Then what can be done is, if you really are looking for a overall data, as in whatever you're seeing on your screens right now, if you really want to include this in reports to be sent daily to your clients, which will really help them engage with your company, keep them hooked, and keep them really attached to whatever specific data that you've been given, what you can really do is click on market to wrap. When you click on market to wrap, what basically would happen is a PDF would get downloaded of this entire screen that we were seeing right now. And this data can be just broadcasted to entire client lists, and engagement of your clients with your company can be increased. Again, a highlight of this report is it is going to be co-branded. Herein your logo will come, and here our logo would be there. Now, what we can really do is, after this critical highlight what we just saw, what we can do is come on to the third important section of our webinar today, wherein we will compare sectors of Nifty and really do a detailed sector-wise performance analysis of all the sectors. For that, what we've done is the compare tab, and then we will proceed with our analysis. What we can do for that is add Nifty sectors, all the Nifty sectors that are, say for example, Nifty Auto, Nifty FMCG, say Nifty Pharma. You can add whatever sectors you want and just create a list. So as we are typing in, the names are getting here, populated here. What you can do is save this list. So let us name this as Nifty Indices score and just save this. When it gets saved, it will get saved in your My List tab. So what you can do next is click on My List, see the list that you just saved over here. It will just get visible over here. You can just click on it, and you need not do the tedious exercise of really adding all the sectors. For convenience sake, for the purpose of our webinar, what I've done is added a list of all the Nifty indices. We can really use this for our analysis today. 18 items, and this will really give us detailed parameters like CAGR, the age of the sector, then the Sharpe ratio, standard deviation, and all the critical data points. So this is how it has just gotten populated. So supposing, for example, you want to see how which of the sectors have really returned highest CAGR and from inception, then what you can really do is click on CAGR, and the sectors get rearranged on the basis of highest to lowest CAGR. So from inception, what we can see is Nifty Private Bank, Nifty Banks, and Energy were among the top 3 which had a highest CAGR. If we do not want to see it from inception and want to really customize the scenario, what we can do is change the start date. Say if we are really looking for a 5-year analysis, so December 2017 onwards, so say 20th December 2017, click on go. And what will really happen is all the sectors will get rated as per their performance from 2017. Then again, click on CAGR, and then now we can see for the past 5 years, Nifty Information Technology, this sector has been outperforming. This has been the top performer. We can see one more scenario. Say, for example, we want to really see what really happened after general elections of 2019. So what we could really do is choose, say, 16th of May onwards and go and really see the performances, which was giving highest returns since 2019. Yeah, this is what it is. Metal, IT, infrastructure, commodities, reality. These were the top sectors. And this really corroborates with what the government policies are. This government has been really focusing on infrastructure, improving infrastructure, and this is how the sectors have really performed in the last three to 4 years since 2019. Now what we can do is go to calendar year analysis. So to see calendar year analysis, we need to go on the years tab. When we click on years, all the calendar years will get plotted, and you can really see a year specific CA return. So just click on this, and highest to lowest returns will get showed in front of you. So PSU banks have been, the sector of PSU banks has been top performer in 2022. If we were to look at, say, 2020, which the COVID year, the dreaded COVID year, which was the top performer, it was Nifty Pharma, as expected. the sales were high, medicines were sold on a very high level, so pharma performed the best. But what happened to Nifty Pharma in 2021? It is nowhere in the top performers. In fact, it is the bottom, second or third last performer in 2021. So this distinction and a quick analysis can really be possible using our platform. What we can now do is go ahead and do a monthly SIP analysis sector-wide. So let us choose, say, an installment of, say, 10,000 and start date of, say, 15th June. Why I have chosen 15th June is because, say, the first wave of COVID was just down, lockdowns were being lifted, and there was a pretty much of stability into Indian markets again. So 15 June could be the date. And then probably an investor would have thought, I should now start investing in the markets. Let me see what it has in store for me. So 15 June 2020 to 22nd December, that is just a couple of days before, and then run SIP analysis. And this is what the returns were. So the top return generator was PSU bank sector, metal bank, and so on. If he really wants to be specific and do a sector specific SIP analysis, and he's really bullish on, say, FMCG, then what can really be done is just click on Run Detailed SIP Analysis tab here. When you click on this, we go to the Tools section, and a sector specific SIP is getting loaded. So installment of 10,000, start date, and then end date, and run SIP. This is how it is. What this gives is total number of installments, invested amount, and the final value. What is really pertinent to note here is if we start the installment on 15th of June, then this is what XIRR we get, that is 18.19%. However, if we could just start the investment just 15 days ago, say 1st of June, our XIRR would have improved by more than 30 basis points by just changing the start date to 15 days prior. So this analysis is very helpful. And this is not just in our platform. You can really take this by clicking on this one-pager PDF report and show this across to the client and show him how your investments will really do. This is a one-pager report. You can also choose to really present a two-pager detailed report. This is what it will be. And yeah, this will have the specific monthly NAV movements captured and your values too. Now, what we can really do is see what a specific fund in a sector did. Say, currently we were at FMCG, and the FMCG sector given 18.45%, right? So what we will now do is load a specific fund, say FMCG IPRU direct. Let us see how this fund really performed. And was it really able to beat the sector XIRR, which was 18%, right? So let us keep the same start date as 2020 of June, 15 June 2020, installment amount same as 10,000 per month, ending date 22nd of December, and run SIP. Wow. So this is what is right here in front of you. So ICICI Prudential FMCG fund was able to beat the sector, FMCG Nifty sector. So that is something which is really good about the fund, that it has really beaten the sector and returned a higher XIRR. If we were not to really just focus on a specific fund, we could even do this for a specific stock. So if you really want to choose a FMCG stock, say HUL, Hindustan Unilever. So what you can do is click on Hindustan Unilever, run a detailed SIP analysis, and we can see, we can again put in the dates which we had chosen. So 15th of June and 22nd of December, installment will be again 10,000, and then run SIP. Oh, so, specifically investing into Hindustan Unilever for the same period with the same installments would have returned a far lesser returns for you. Our sector average was itself 18%. Fund performance, ICICI Prudential fund performance was 22%. But if you're really focused on a specific stock, which is Hindustan Unilever, and then the stock did not return even the benchmark levels, right? It was way lower, only 9.5, so 9.93%. So this is how, again, all of this is exportable. You can really present this data to your clients and really show them how they can improve the performance, or you can really create or recommend specific schemes. Let us now come back to our compare section. And currently what we just did was a SIP analysis, right? Now let us go ahead and do a point-to-point analysis. What that will do is it will return figures of a lump sum investment. We just saw SIP. Now let us see how lump sum would work. Say, just click on annualized. There are two options, absolute and annualized. Just click on annualized and just click on sort. So for 2020, the best performer was pharma, as it is visible. 6 different slots are available. You can really choose. You can really change all these dates and really see how your lump sum investment would do over this period in a CAGR basis. That was XIRR, SIP was XIRR. This is CAGR. And just click on sort, and the returns get sorted in a descending order. Say in 2019, Nifty Realty was a top performer, followed by financial services. Now what we can do is come to correlations, which is again a very important parameter that can be used to understand the relation and the coordination between sectors. So as we can see, infrastructure specifically has a very moderate correlation with Nifty FMCG. So if you have a Nifty FMCG fund in your portfolio and you add in, say, Nifty infrastructure, their movement will not be as coordinated as, say, having a Nifty bank and a Nifty infrastructure focused fund. So this is what this analysis is really helping us to find. For example, if we see Nifty metal, and it has a very high correlation with Nifty commodities, which is evident because Nifty metal being a part of Nifty commodities as such. On the other hand, it has a very low correlation with Nifty information technology. So if you are really looking to diversify your portfolio and you're really bullish on these two sectors, what you could do is rather include these two. If you really include sectors which are very high on correlations, like say Nifty bank and Nifty service sector, then what will happen is when Nifty banks perform well, even Nifty private banks will perform well, or Nifty service sector will perform well. But at the same time, if Nifty bank really underperforms, the entire portfolio will give you very low returns. So if you're looking for diversification, what you should really do is pick and choose schemes and funds or sectors which have lower correlation, not a very high correlation. This can really be done to really balance the portfolio returns and really generate good returns. Again, all of this I would like to really highlight can be downloaded in customizable PowerPoint presentations. Also, specific screenshot facility is available. You can really use this for broadcasting reports to your clients and even for your further analysis. I think here this brings an end to our specific topic related webinar. We can now throw the forum open for Q&A session. Our team will help you solve all your queries. What you can really do is put your queries in the chat box, or you could even unmute yourself and ask your queries. Our team will get it solved. Thank you.
Right, so there are a couple of questions on the chat. One of them is if we can compare direct and regular funds. Yes, that's absolutely possible. So in the compare section, let's just clear this list here. And yeah, if you could please just take one fund and then add the regular version and then add the direct version of that same fund. Just pick anything. So we'll show you here. So Mere Asset Saving, hopefully there's a direct version, so we can try to add that in there. Yeah, just search for my asset savings. I think maybe savings fund direct. There it is, just below that. I think it's the third from the top. So that's definitely possible. You can do that for any of these. Then there's another question saying, economic data, can you please include metrics besides these figures? So this is what we have so far. I mean, if there's anything specific that you're looking for, let us know. I mean, we've got a reasonable number of items here. You can check the history. You can also check, obviously you can compare against countries. I mean, this is the data that's available. If you can, let us know what other metrics you are looking for. We can.
No, I mean, what I meant was like, if you can just include those percentages and, figures would be in dollars or $1 million or rupees, besides the various,
Okay.
data.
Okay,
Yeah.
I understand. Yeah. It can obviously.
So what will happen now when we, make the PDF and send it to the clients, they will be able to understand more properly, like, if you have those things.
Okay. Understand. Okay, fine. We will check it up. So just to be clear, it kind of means that when you have GDP per capita, what does 1961 really mean? Is that
correct? Or GDP 3173 means, or the GDP per capita. I can understand it is in dollars, but the client would be.
They will not. Okay, understand.
Yeah,
yes, understand. Yes, that makes sense. Perfect.
Yeah.
Perfect. Yeah.
Okay.
There's another question saying, can you change the period in correlation? So yes, you can. We'll just show you in a different way. I mean, we are looking at the compare section. In this compare section, the correlation analysis doesn't let you change the period. This is something we can add. Well, if anybody's on the chat from our team, please just note this down. But where you can actually change the correlation is if you actually load a portfolio, you also get a correlation tab, and in that tab, we're able to change the start and end date of whatever you're looking at. So, for example, if you have a portfolio of mutual funds, you will be able to change this period in portfolio analytics. So we'll just quickly show you that. If you can just run any portfolio. So just cancel that and just run any of your portfolios. Yeah, just run that. So if you have a portfolio of funds, stocks, or anything like that, once it finishes running and you go to the correlation tab, you can actually change the start and end date, and instantly it will reflect that change. And we will add it for our January release, that you can do the same thing that you're doing here. You can do it in the compare section as well. Yeah, so there's a question on the chat saying that some of the some cache files may not be loading because there's a huge number of folios in there. So this is something that we have actually begun to address. You can expect a release in most likely by tomorrow. When you add, currently what happens is in the statement analyzer, if you're adding, a new NSDL, CDSL, or CAMSCAS file, if it has hundreds of stocks, or let's say 150 mutual funds or something like that, it does load, but you will fail to see the details, and you most likely will not be able to add it to the portfolio section. So we have figured a solution out for that. Of course, it takes a few extra seconds to load. So for example, here you can see 11 funds have been loaded very easily. But if this was 211 funds, then that is not working. So we have figured a solution for that, and that should be releasing just in the next day or so. We will send an email out about that as well, hopefully by 24th or 25th. So once that is done, hopefully your file will load. If it doesn't, then please just drop us a line on support@ngenresearch.com and we'll check it out. But if it's a few hundred funds or stocks, it will most likely be fine. Just one thing to add to that is that when you're checking correlations for a huge number of assets, please note that the way it will show up it'll be a very, very large matrix, so it might be hard to kind of read it. You will have to zoom out on your browser to kind of see it properly. So this is only 28. As you can see, it's filling up the page. Now you can imagine what this is going to look like when you have, let's say, 200 stocks, right? So you will have to zoom out quite a lot to kind of get a decent picture. You can, of course, download it in Excel. There's an Excel link right there. So that might make it easier for you. And also one more thing to note is, if there's a lot of stocks and there's some stocks that are ending before today, while some stocks are just started a month ago, that will cause an overlapping error. So you will have to look after, make sure that there are, the data that you've input, the number of stocks that you input, that there is at least a minimum overlapping period for the portfolio analytics to run successfully. Otherwise, obviously, we can't even give you correlation numbers if there is no overlapping period of returns on the stocks that you've uploaded.
Hello.
Hello, yeah, go ahead.
Sir, regarding when we compare, say, I have made one portfolio and I am comparing with Nifty index funds.
Yeah.
So when we save into PowerPoint presentation, in that it shows only the difference between the my portfolio and Nifty returns.
Yes.
Only percentage. If it shows, because we are, when we are generating PDF, we'll put some initial amount, say 50 lakhs or 10 lakh rupees. So
Yes.
it will compare to that. So it will show in the percentage, but it will not show in the amount wise, sir.
I see. So you're talking about comparing two portfolios, or you're talking about one particular portfolio?
No, two portfolios, sir.
Okay. So here we have, just load anything in here. So here we've got two portfolios side by side, and then create PDF. So here you can put, let's say, put 1 crore or whatever, just put some number.
Okay.
And then go. So you're saying in the comparison section, everything is I see. Okay, right. So you're saying you would like to see some rupee numbers here.
Yeah, sir, because it will be more easy, sir.
Yes, yes. So
and we can differentiate.
Yeah. So will you be, I mean, in this case, let's say the amount is 1 crore, right, that you put in. Okay. Then here, when we see 30.35 minus 8.36, we will just show you 30 lakhs, minus 8 lakhs, 3 lakhs, 26 lakhs.
Yes,
like.
And right? Down, you just scroll down, sir.
Yeah, scroll down.
Last column, sir. When
last, right in the end.
So here is only showing this thing. What is the appreciation we are getting, sir?
Oh, so that will be right in the top. So just go to the first page. So here we say an annual return, right? Well, okay, cumulative return 281, 351. Okay, so here you would like to see 2.81 crores and 3.51 crores.
Yeah, sir. And down also in last page, what you have shown now, whether it is invested amount or it is the appreciation amount, we cannot differentiate, no, sir.
Oh, so basically
we have to calculate.
Yeah, so basically, I mean, in this particular analysis, that will be invested amount because it's a back test.
Okay.
And it also can serve as two things, because you can also just scroll down to the last page. You can also show the client that I'm showing.
So here it is. Yeah.
You know, I'm showing that here you can tell the client that, look, I'm showing that if you allocate your 1 crore as follows, then what we will do today, we will buy 28 lakhs of Axis Blue Chip, 25 lakhs of PGIM, etc. Right?
Okay.
So this can give the client an idea that what they have to buy now.
Yeah, that is so. But it is when back tested, if 23 is grown, how much grown, we can show it.
Oh, I see. Okay, understand. You're looking at the contribution of each. Okay. Got it. Yes, fine. Understand.
That will be much easier, sir.
Yeah, we can work on the rupee-based PDF to actually have more rupee amounts all over. Understand. Okay.
Say when I put 23 lakh 0.7 into Nifty India Pharma Fund, so Nippon, so what would be the amount today? If I invested for 5 years before and now it is. So when we are back testing, it should show the thing current value also.
Got it. Yes, understand. Okay, perfect. Okay. Yep. We've got that written down. We will work on it, sir.
Aaron.
Hello, sir.
Hi. See, you have a very beautiful, can you come to the home page?
Yeah.
And okay, this economic data
Yes.
where you have GDPs of and employment and inflation data. So once we click, we come to know about all inflation of all markets, or I
Yes.
would say all countries. But
Yes.
can we do a correlation, even analysis on this, that how inflation and interest rate is doing in the India per se text? Let's say if I want to compare inflation versus GDP versus interest rate of government level bonds. So if I can do that and plot that into Sensex also, that what I want to say that if I plot how indexes behave vis-a-vis inflation and GSEC bond. So if we can do this correlation, then we'll come to know whether whenever the interest rate rise, how the um, uh, Nifty has performed or the Sensex has performed, or how the NAV has performed. So can we correlate that so that we can actually bring all data together and on a graphical representation which makes easy for the client to understand, instead of having all the
Yeah.
data for last 1 year of all the countries, because it hardly matters to me what is happening in South Korea or
Yeah.
Brazil, but what I want is how my Indian markets inflation is panning out over the last 10 years, 15 years, and plotting that onto Sensex or GSEC so that I can correlate that how NAV is performed, how market is performed during various interest rate and inflation cycle.
Understand, sir. So here, the ideal place, I guess, where we could put it. Just before that, can you just click on the inflation rate history icon? Okay, so there's enough data there for sure. Just go through. These are monthly data points.
I got it, sir. So, but I'm saying the moment I put that data,
Yeah.
can I put that into Nifty 50 and
Yeah. So
correlate this how?
currently it's not there. So what we can do, because I was just asking her to click on this just to see the data is there. It is there. So what we could do ideally, maybe in the compare section, where you can already add indices. We let you add the historical data for some of the economic indicators also.
Absolutely, because then that will be very helpful for us to correlate, put it across into various time frames. And in fact, since we have a very good data source collection sector, so
Yes.
how there are periods of recessionary and stagflation also in the past.
Yes.
So if we just put those data, then when those periods were available, how markets interested have panned out. So that will help us understanding the cycle well and to advise our clients accordingly.
Understand, sir. So, sir, I think this makes sense. I'm just gonna write this down as the item. So basically, we want to add historical data for economic data in the compare section.
So we can do various analysis on the markets, as well as we can, even if we want, we can plot that how the index has performed, how the NAVs have performed various at different period, and there is a compare section where we actually say what in and out of the stocks.
Yes.
So instead of stock, if we can say how the fund manager behaved and moved out of the sector. Let's suppose he was heavy on IT. When he started cutting our IT weight and then adding it to infrastructure or cyclical. So by this, we can actually understand the behavior of a fund manager, and we can understand what kind of a fund manager, and that will be reflected in his performance also. So we'll be able to judge him well, because whatever fund manager will say, he will always say his fund is good, he's doing very well. But by his action, if we can plot that, which we are doing actually also, when he's actually rotating from stock, he's reducing from KPIT from 7% weight to 4%. Okay, so it means he's reducing on the IT sector. So we can summarize that this guy is being cutting down on IT and moving into construction or oil and gas sector or capital goods sector. So we'll understand where exactly he's taking the portfolio.
Fair enough. So I think that makes sense, because once you're able to add it in the compare section, you can do performance chart like here. You can do correlation. You can do all of that stuff.
And finally, at times what I find that the compare section is having very limited data on the fund side also. At times it's only 2020 onwards, whereas we can actually go back for 2010, 15 also.
So which one, sir?
Like there are certain times when we actually come to compare now. So
Yeah.
there is some data limitation on the stock size also, that sometime from 2013 onwards the data is available. Sometimes
Well, so here what you will find is if you try to go back on the start date, it gets automatically blocked to the youngest item. So, yeah, so if you find that there are some index or something where the data is not there, just let us know, we can back populate.
But for the stocks I'm talking about, because when we say that SIP SIP is a good tool for long term, so at times we find that the data is very from 2010 onwards only, or 15 on 13 onwards.
Right. So for stocks, I think for stocks we don't have historical data for that long. This is something that we can figure out some solution. But right now, whatever history you see, even if you load Reliance or something, just load Reliance here. Yeah, Reliance. Okay, so let's see. So it's 13 years, sir, since 2010. Yeah. Obviously, I mean, so I think all our stock data starts from there. So if you want more,
if you want more, then see it is from 2010 onwards.
Yes.
So which is not the correct, because when we say talk to people that go for SIP SIP in stocks also, so we can tell them that how, and then when we compare that with mutual fund, so then the entire purpose gets defeated, because the data is from 2010 and certain funds are from 1990, 2000, 2001 onwards. So that's where we get lost at times.
Understand. We will try to see if there's any way we can back populate more stock data. Usually vendors are not happy to share this, but we'll try to figure something out.
That you can do, but I would only request that if you can work on the macro and micro data also comparison, that will help us understanding the markets.
Yes, sir. That we definitely work on, because that is possible. The data is already there. So so that we'll be able to do. We'll work on that.
Thank you so much. Thanks.
Hello, I'm Nikhil.
Yes, please.
Am I audible?
Yeah, go ahead.
Okay. I'll start just a few things. One very initial thing is that if you could, if there is a chance, if you have a structure where this platform, this membership subscription that we take, I believe with more than one user, you kind of get a pop-up saying that somebody else is using it. So is there a way where if it comes with payment, that is also okay, where you can give us an option of maybe say up to 3 users or 4 users, because we are a team of 4 and 2 to 3 of us only use it. I'm not saying we need 50 people or something, but the possibility of taking it to at least a minimum of 2 or at least 4. If it is coming with a payment as well, it is okay. You can kind of intimate us, but it would be good if you could bring this up, please.
Yeah, I would just suggest in that kind of situation, if you could please contact the respective RM, he would definitely guide you with the additional login charges, and how much ever login that you want to add on. You can just discuss with the respective RM, or you can talk to our business head, Anirudh Moitra, and he will guide you definitely and take it forward from there.
Okay, that is okay. Another thing is that on the economic data part, just like we have data from a long period, when we click the see history, we see kind of for long periods of time. Is there a possibility of bringing a date range over there? Like, so when you click see history for say an inflation rate, it's kind of like some 2001 to, I mean, it's a big data. Is there a possibility of bringing a date range over there, say 5 years, 1 year? I hope if you can add that. So here it's almost 10 years. Possibility of bringing a date range over there?
Yeah, I mean, I think that should be fine. So you're basically saying, I mean, if we put like a drop down or something with a few options like inception, 1 year, 3 year, 5 year, 10 years, something like that. Will that suffice?
Yes. So that we can actually pull out where there was periods of time where there was really pressure in the economy and if inflation was doing well and things like that. Also, at the same time, somebody else also brought it up where if we can compare these economic data with other economic data or even indices, so just interest rates or rising interest rates, में Axis Blue Chip ने क्या किया. So if we can do something like that also, then also it would be kind of good because I believe these suggestions are only because these data are with you. Just we can do something more with the data which is on.
Yes, sir, definitely. I think that will definitely get added. While you're here, can you just close this window and just change the country from India to something else like US or something? Okay, so sir, one thing is that historical data is currently only available for the Indian indices. But we have access to this, so this can be added. So we can at least take some of the major countries and add historical data.
This is what we are also kind of looking at. So it's India, because we see the data is there. Only thing is that the date range is there. We can get a little better range.
No problem.
Also, another thing is that so suppose we put in a portfolio of the same number of stocks of a client. We add it. I mean, we come in the compare section. We put it up. Is there a possibility of bringing stock prices over there?
So yes, you can actually do that. So just go to the compare section once again.
I mean, stock price in the sense, what is today's price, and if possible, also the 52-week high at once. Is there a possibility of that?
So here's in the compare section, you can easily add stocks as well.
Yes.
And so, and then just like any fund, you can add, so let's just add anything. So you can add a couple of stocks, you can add funds, indices, whatever you want.
Okay.
So adding stocks is, is definitely a possibility in the compare section. So for example, even if you load a portfolio of stocks, you want to add more stocks to it, you can do it. Even if you run a portfolio of stocks in the portfolio section, once you run it, you can click on the compare button, and it will load all the stocks. For example, this is a 28 stock portfolio. Once it finishes running, you can click the button on top and it will take you to the compare section and add all these stocks to the, that button. So just click it, you can clear the list and add your stocks there.
Yes. So what I was trying to suggest is just like you see future consumer 1.46 rupees. Is there a possibility of bringing the 52-week high as well over there?
Oh, I see, in this list.
Yes.
Okay.
When we download, we can actually see, so the portfolio is corrected by how much, just by putting a formula, we kind of know how much is the stock corrected and where can we kind of add more money of the client. So it becomes very easy.
Okay, so here you just want to see the 52-week high, right?
Yeah, so that
and that is what in the last 12 months the highest price. That's it.
Correct.
Okay. Yeah, I don't think that should be a big problem. We can put that down.
Just a 52 a column where a 52-week high is mentioned, and then when the Excel download happens, the 52-week high.
Excel download will come. Yeah, no problem. Yeah, we've got that.
Thank you. After that, I mean, your platform is great, and sure.
Are there any questions from anyone, either on the chat or just on voice, please? Okay, I think if there are no more questions, we can go ahead and close for today.
Yes, sir. Thank you everyone for joining in. We have really noted down your feedback. We'll definitely work on it. Again, thank you all for joining on this Friday evening. We'll meet again live next week, same time, with a new and exciting topic. So do stay tuned. You can also view our past webinar sessions on YouTube, on our YouTube channel, NGEN Markets. I wish you all a very Merry Christmas on behalf of NGEN Research. Have a great weekend ahead. Thanks a lot for your time. Goodbye.